Around the world, governments are drowning in debt. Households are maxed out. Corporations are borrowing more than ever before, and yet markets keep climbing. But behind the optimism lies a dangerous truth: the biggest debt bubble in human history. The question is no longer if it bursts, it's when. In this video, we'll break down how the global debt crisis began, why it's accelerating in 2025, and whether 2026 could mark the start of the next global recession. To understand today's debt explosion, we need to go back to the era of cheap money. After the 2008 financial crash, central banks around the world cut interest rates to near zero. The goal was simple: make borrowing easy so the economy could recover. And it worked, sort of. Money became free. Governments borrowed to stimulate growth. Corporations borrowed to buy back shares. Consumers borrowed to buy homes, cars, and everything in between. For over a decade, the world lived on credit. Then came 2020, the pandemic. Governments printed trillions of dollars to keep people and businesses afloat. And that's when the real bubble began. Let's look at the numbers, and they're staggering. Global debt, including governments, households, and corporations, has surpassed $315 trillion, according to the IMF. That's more than 3 times the size of the global economy. Here's what's scarier. The U.S. national debt just crossed $35 trillion. Japan's debt-to-GDP ratio is over 250%. Even developing countries are borrowing at record pace just to survive. And every single day, the world adds another $1 billion in interest payments. Cut to visuals: ticking clocks, debt charts, world map highlighting red zones. But what happens when the era of cheap money ends? Starting in 2022, inflation forced central banks to slam on the brakes. Interest rates skyrocketed. In the U.S., rates jumped from 0% to over 5% in just 18 months, the fastest increase in 4 decades. That shift changed everything. Governments now pay record amounts just to service debt. Homeowners face double mortgage rates. Businesses are struggling under heavier loans. And yet, despite all this, debt keeps growing, because the system can't function without it. Governments can't stop borrowing or public services collapse. Corporations can't stop refinancing or they go bankrupt. Consumers can't stop spending or the economy freezes. We are trapped in what economists call a debt spiral. So how do we know when a debt bubble is about to pop? History leaves clues, and they're all flashing red. 1. Debt outpaces GDP growth. When debt grows faster than the economy, repayment becomes mathematically impossible. In 2025, that's exactly what's happening across most major economies. 2. Asset prices detached from reality stocks, real estate, and even crypto have rebounded, not because fundamentals improved, but because liquidity keeps flowing. 3. Rising defaults and bankruptcies. In 2025, corporate bankruptcies in Europe and the U.S. hit their highest levels in a decade. 4. Consumer delinquencies, increasing credit card and auto loan defaults are quietly climbing, a warning sign of household strain. When you add it all up, excessive debt, slowing growth, and high rates, you get the perfect recipe for what analysts call a debt supercycle. Endgame. Visual: slow montage of empty offices, for sale signs. Stock tickers falling. So, will 2026 be the year the bubble finally bursts? Here's what experts are watching closely. 1. Central bank policy reversals if inflation continues cooling. Central banks may start cutting rates again in 2025 and 2026. That could temporarily ease debt pressure, but also reinflate risky asset bubbles. 2. Sovereign debt risks. Countries like Italy, Argentina, and Pakistan are already struggling with repayment. If one major nation defaults, it could trigger a domino effect across global markets. 3. Corporate refinancing cliff. Trillions in corporate bonds will mature. In 2026 to 2027, if companies can't refinance at lower rates, expect mass layoffs and defaults. 4. Consumer spending slowdown. With wages lagging behind inflation and household debt near record highs, spending could collapse, pushing economies toward recession. So YES 2026 could be the reckoning. Not a total collapse, but a hard reality check, where over-leveraged systems are forced to reset. So how do you protect yourself if the debt bubble bursts? Here are some smart defensive moves. Diversify your assets. Don't rely solely on stocks or property. Add gold, commodities, or defensive sectors. Hold some cash or short-term instruments. In a downturn, liquidity is power. It lets you buy opportunities cheap. Avoid over-leveraging. If you're borrowing to invest, tread carefully. Debt amplifies both gains and losses. Focus on real value. Businesses with low debt, strong cash flow, and essential products usually survive recessions best. Remember, every bubble ends, but every reset also creates new opportunities. The story of global debt is really a story about human nature, our desire to live beyond our means, and our belief that growth can last forever. But history says otherwise. Every empire, every economy, eventually meets its limits. As we head toward 2026, the signs are clear. The system is stretched. The balance is fragile. And the next few years will test how much debt the world can truly bear. Whether the bubble bursts or slowly deflates, one thing's certain: the era of easy money is over.